Thanks, Michael, and welcome, everybody. Thanks so much for joining us today on our special virtual Investor Day. I'd like to start with ICL at a glance. ICL has a tradition of over 90 years. Today, we have over 11,000 employees, $5.3 billion of sales in 2019, and about $1.2 billion of EBITDA. It's interesting to see how tradition meets disruption. We have a tradition originating in the Dead Sea, very close to an amazing Israeli ecosystem for high-tech and agro-tech. And in the past couple of years, we have focused very much on defining what our core competencies allow us in order to build the next growth drivers for ICL. We've leveraged our relationships with the ecosystem, as well as our global R&D infrastructure with 250 FTEs globally. We've looked into the vast amount of IP developed in the company over the years, as well as created an amazing new accelerator, an internal accelerator that we call BIG, that created immense amounts of new ideation. And we came up with the 5 growth drivers which we believe will lead ICL to significant, sustainable growth in the future. The 5 growth drivers that we have identified include alternative proteins and food tech, next-generation fertilization, new sustainable solutions based on bromine. We also have developed a vision for digital agriculture as we see agriculture happening in the future. And we've developed a set of new material solutions that solve some of the world's most pressing problems. The result of all of these is that we expect that by the year 2025, we will be able to generate double-digit growth in a consistent, long-term way. We have in ICL significant strategic assets, starting from significant resources coming from the Dead Sea, with low cost of mineral extraction, as well as our position as the sole global provider of polyhalite, polysulfate solutions, an organic fertilizer that is coming into the market, that we're bringing into the market. We have strategic locations. Our supply chain allows us significant advantages versus our peers because of our geographic locations and because of proximity to ports. We also have vast amounts of know-how, industrial know-how, and other know-how in agronomy and in chemistry. And on top of all that, we have the Israeli ecosystem that I mentioned. I think it makes sense to look back at the previous few years and see what has transpired in ICL since our previous Investor Day. The previous Investor Day was in the beginning of 2018. And I'm very happy to report, as some of you well know, that we've significantly beat our internal plans, both in bromine division with over 30% of EBITDA growth, in our potash division with over 30% of EBITDA growth. In our phosphate division, we also beat our internal plans, growing EBITDA by over 20%. So in all 3 divisions where we have global leadership, and I'll get to that in a minute, we exceeded our plans and delivered results beyond expectations. The only division where that didn't happen is our IAS business, our specialty fertilizer business, where during these past couple of years, we have developed the infrastructure which we believe will get us to where we plan to be after some correction. The end result is that we delivered above our targets for the past 2 years, reaching EBITDA growth of over 30%. During that time, and with divestment made in the beginning of 2018, we generated enough cash flow to significantly lower our net debt to EBITDA ratio to 2.0, down 31%. Leadership is a basic component of our strategy. And I'm happy to say that in 3 or 4 of our divisions, we're already global leaders. We're global leaders for our bromine business. We're the market leaders, having the most capacity, the most manufacturing capabilities, and also the largest isotag fleet, as well as the most robust R&D organization. We're also leaders in specialty phosphates. In fact, we have 24% market share, and we're the only global phosphate solutions provider that has a presence in each of the major geographies. We're leaders in our potash business, the way we define leadership as well. We are one of the top 3 most competitive suppliers on the cost side, and we have great positioning on the cost curve from the Dead Sea. In fact, for India and China, we are already the lowest cost provider in the world as of today. In order to deal with what I mentioned before, our IAS business not reaching leadership yet, and part of that was due to an M&A that did not take place that was planned. We recently consolidated our sales and marketing infrastructure from the 3 divisions, from the 2 commodity divisions, together with the specialty division, and created a unified infrastructure to leverage all our capabilities to the crop nutrition customers. The result is that this new organization is much better positioned in terms of future growth and future product development, as well as customer relationships, in order to create the growth that we expect from our specialty business. We now have one unified organization that deals with sales and support of our crop nutrition clients, and we are much better positioned to go hand in hand with our clients into the future. I talked about innovation and leadership in innovation, and I mentioned the 5 growth drivers that we see bringing us to the future with a higher level of growth than currently. That includes alternative proteins, next-generation fertilizers, new sustainability solutions for bromine, digital farming and ag tech, and novel materials. I want to give you a little taste with a short video about what's going on in our company today.
Today, everything, and I mean everything, must be cool. People, cool. Products, cool. Cars, dogs, companies, even companies. Cool, cool, cool. Okay, take ICL. We're big, huge, a massive company. Is that cool? A century of experience. Cool? Dozens of sites worldwide. Is that cool? What about some of our recent developments? Industry 4.0 technologies, next generation fertilizers, a digital platform for agronomists. How about turning waste into valuable products? Important. Is it cool though? Magnesium deodorants for athletes, organic fertilizers, green energy storage, hydrogen fuel cells, meatless meat. Is that cool enough for you? You know what? We don't care about cool because cool doesn't matter. What does matter is the future. What matters is feeding the planet and making sure humankind has what it needs to flourish. We challenge, we imagine, we innovate. We don't care about cool. We're here to shape the future.
Pretty cool, huh? I talked about the innovation and being leaders in innovation, and I think that's the path we've taken, and we feel very confident about our direction. But that's not enough. We also need to be leaders on cost structure. So we're very heavily engaged in cost-cutting efficiencies, and we believe that the strategic steps that we've taken will get us to be on target as planned. So I talked about cost reduction in the Dead Sea, cost reduction in Spain. I talked about cost reduction in our polysulfate mine in the UK by growing capacity. Add to that also other cost initiatives, such as cutting our cost structure in our joint venture in China, circular economy and waste that we've invested in creating usage for our waste in a way that cuts our additional costs dealing with waste. We also are heavily engaged in Industry 4.0 initiatives with a vast number of projects. Some of them have already come into fruition, and we see a very healthy pipeline with our ecosystem that is going to create additional cost-effective solutions for our industrial needs. And of course, if we have innovation and cost leadership, the next element that is necessary is sustainability. We have become religious about sustainability in ICL. Sustainability is actually the common thread of all the 5 growth drivers that I talked about. All of them deal with sustainable solutions for humanity going forward. And I must say, we've made tremendous progress in ICL over the past few years with reduction of emissions, with diversity, with transparency with our stakeholders, and the results are an increasing amount of recognition from third parties, some of which you can see on the slide, and I think that many others are on the way. We've taken a path. Doing the right thing gets us to where we want to go, and that is why we're going to continue to do the right thing. And sustainability fits with all our strategic initiatives. So what does all of this mean? If we achieve our goals on innovation, cost reduction, and sustainability, what is ICL going to look like in the future? So our main targets for 2025, we intend to grow our EBITDA by over 50%. We intend to grow our free cash flow by 100%. We intend to decrease our capex by 25%, and this is based on the fact that some of the large infrastructure projects that ICL has taken upon itself have either reached completion or are soon to be complete. And finally, we're going to decrease greenhouse gas emissions by an additional 14% until 2025. Let's look at some of our growth drivers. In bromine, over the past couple of years, we already transferred a huge part of our business to long-term agreements, which give us more visibility and better confidence on forecasting our future. It also strengthens our customer relationships and builds them on value and not on volume. These long-term contracts have positioned us much closer to our customers. Better positioned for future development. And we had a breakthrough developing a new platform that allows us to generate new technologies for sustainability applications that need the use of bromine in the future. My colleague Anat will talk about that shortly. The bromine division targets for 20 to 25 are growth of $300 million at an EBITDA target of about 30%. Specialty phosphates. I mentioned that our new growth driver is alternative proteins. We've developed unique technologies that have already been commercialized, and by that, we're already diversifying from phosphates, which means that in order to generate faster growth, we are leveraging our current infrastructure, in the food business, our customer relationships, our R&D capabilities, our understanding of the problems that need solving, and the current trends in the market of health, well-being, and sustainability. And we're using that know-how in order to develop technology that will help us grow. My colleague Rado will talk about alternative proteins and our plans for the food business. Our current plan for the years 20 to 25 has $650 million of growth planned, including about $150 million coming from M&A and $500 million organic, at an EBITDA target of 18%. Let's go to the crop nutrition market. For crop nutrition, on the cost side, we're completing our capacity increases. We've already increased in the Dead Sea, and we're increasing now in Spain, as I've mentioned. We're shifting to profitability in polysulfate in 2021, taking a run rate of over 1 million tons at the end of 2020 and ramping up to 1.3 million within the next 2 years. And we're targeting increasing our specialty business in growth markets such as China, Brazil, and India, as well as engaging in M&A to further support our geographic expansion and product mix. The results are that we have a target for a growth of $1 billion with 25% EBITDA by 2025. Growth is expected to be driven by demand for new fertilization, organic biostimulants and micronutrients, strong growth in targeted geographies such as China and Brazil, which account for about 70% of global growth for specialty fertilizers, and additional M&A that we expect, as I mentioned. So that brings us to the consolidated picture. And what we expect for the next 5 years is a CAGR of about 5.3% in our sales. But what's really exciting is that we expect double-digit growth based on the 5 growth engines that I mentioned from 2025 onwards. We expect sustainable, long-term, double-digit growth beyond 2025. We intend to double our cash flow. This may even happen before 2025. We've made significant progress on cash generation in recent years, and we feel that we can translate the improved results into cash flow very fast. What does this mean for EBITDA? It means that we currently have a plan to grow EBITDA by about 7.5%. But the exciting part is that we feel that we can reach above 15% sustainable growth of EBITDA beyond the year 2025. It's important to mention that most of the growth in EBITDA in the next 5 years, even before we reach the threshold of double-digit growth, comes from specialties. And this is very important because currently we're about 50% commodities and 50% specialties in terms of the contribution to EBITDA. But since most of the additional EBITDA is coming from specialties, the end result is that we will be about 2/3 EBITDA coming from specialties and 1/3 commodities from the year 2025. What this means is much less dependency on commodities and, of course, potential for additional growth. And that concludes my presentation. Thank you so much, and stay with us. You don't want to miss what's coming. And, of course, we'll be there for questions later. I'll pass it on to my colleagues now. Thanks again.